So order of things today, we're going to go over a real quick video clip that was shared to me from an XPR community member or a TDBN community member. I wanted to share it with you guys real fast. Then I want to go over the fundamental backdrop that I gave you guys this rising in the fundamental section, talk about the total cryptocurrency market cap. We will take a look at, obviously, of course, our most viewed pairs in this community. We'll go over some XRP technical analysis, and then we'll go over Canton technical analysis, take a look at some levels, go over market sentiment, and just do a brief update on that. We'll touch on the fundamentals that came out after the reports that I gave you guys this rising, just to show you guys that what I was telling you all in the chat aligns with what was breaking. And then we'll go back and we'll break down my trades for today. I took 3 positions today. I took sells to buys to sells. I want to go over this in detail. First, utilizing the CYPRX 2.0 methodologies, I want to briefly touch on 3 confluences that I feel like have made me the most lethal in the markets as a scalper. I'll actually go over 4 now that I think about it, but 4 primary confluences that I utilize to scalp when I'm taking positions in the market utilizing CYPRX 2.0. Hopefully it'll help you guys, show you guys kind of what I was seeing in the market this rising, how I was able to shift my mindset from sells to buys to sells so fast and quickly, utilizing these 3 confluences. And I'll add a 4th one on there, just to give you guys some juice. And then once we're done that, we'll roll over and we'll briefly touch on all of these positions on order flow. And I want to kind of talk through what myself and Scalper have been talking about in private, which is effort versus result. And I want to show you guys that on the order flow charts. All right. So that's what we're going to go over today first. Starting off with the total cryptocurrency market cap, the fundamental backdrop, kind of what I was looking at and seeing this rising, and the report that I gave to you guys, and kind of where we are at right now. So as of time of recording, the total cryptocurrency market cap has given up some gains today. We are down roughly about $40 billion intraday, still briefly, we're probably about to break the $3.2 trillion threshold now, but briefly holding above the $3.2 trillion threshold. As I mentioned, the vast majority of gains in this run up were primarily driven by the top 10 crypto assets, Bitcoin and Ethereum primarily. We're now starting to see some of that shed weight. Altcoins are obviously, of course, still performing like absolute crap. With that being said, taking a look at the fundamental report this rising, when I gave it to you guys, this was 8 minutes after the news came out, after I had read thoroughly through it, made sure that I was analyzing it properly for you guys. I said here, weekly jobless claims came in at 198,000, which is well below expectations of 215,000 and lower than the prior reading of 207,000. Right off the bat, that screams that the labor market is a lot stronger than markets had anticipated. And so what does that tend to do? Push back on the rate cut trajectory. That tells us fewer people are filing for unemployment, which is a clear sign that layoffs remain low. Continuing claims also fell to 1.884 million, beating expectations and declining from the previous 1.903 million, showing that people who lose jobs are finding new work relatively quickly. The 4-week average dropped to 205,000, reinforcing that this is not just a 1-week fluke, but part of a steady trend. On top of that, regional manufacturing surveys showed improving business conditions and solid employment readings, especially from the Philly Fed. Altogether, this data points to a resilient labor market, not a cooling one, and it likely pushes back against the idea that the Fed needs to rush into rate cuts anytime soon. However, crypto seems to be holding support for now. I'd say that this is primarily driven by the fact that markets already priced in the pushback on rate cuts months ago, back in November, December, and heading into the new year. This news doesn't take rate cuts completely off the table, with 2 rate cuts still viewed by most economists. Also, markets are pricing in possible positive legislation for crypto and easing tensions around Iran and the US conflict. For now, I hold the same bias. unless something changes the current sentiment in crypto in order to push it back below the $3 trillion threshold, with sellers regaining control, I remain optimistic for a further recovery. We will still be closely monitoring Fed speakers, geotensions, and tariff updates as we roll into the weekend. So I still hold that sentiment for now, albeit right now, nothing that I've seen on the headlines is supporting a further risk on environment. So here now you guys can see after the news, this came out shortly after, we see dollar rises as US jobless claims unexpectedly fall. The dollar rose on Thursday after data showed that the number of Americans filing for new applications for unemployment benefits unexpectedly fell last week, further boosting expectations that the Federal Reserve will keep rates on hold for the next several months. This report alone does not support excessively bullish price action for crypto, as we know that when rate cut perspectives are pushed back, it tends to weigh on crypto prices in the short term. One thing that I am seeing that could be something of like an optimistic boost if we do see it materialize. Inversely, if we see it escalate, it could be bad for risk assets as we head into the weekend. You can see briefly in the headlines, it just says Trump sees Iranian crackdown easing. That word right there, easing, is a key vocabulary word when it comes to geopolitical tensions. However, we're seeing some things where Iran has warned of a retaliation if Trump strikes. You can see that right here, and that's just from 3 hours ago. So, with that being said, we will be monitoring this as we roll into Friday and heading into the weekend, as we know that these geopolitics tend to flare up over the weekend. So, any escalated tensions, excuse me, could weigh further on crypto prices. But for now, if the optimism remains after this brief pullback, some slight profit taking, some capital reallocation, maybe then we could see the crypto market completely supported if this continues to view as optimistic. On top of that, we had multiple Fed speakers this week. And like I mentioned in the report this rising, Fed speakers are still holding on to the narrative that we could still see rate cuts this year, but data needs to support it, which is why I don't think that crypto's aggressively selling off. Yes, we're seeing a slight down day, but we're not seeing any excessive bearish price action. I'd still just be mindful that if we cannot break above the $3.2 trillion threshold that we touched on last week in the weekly Zoom calls, then this is most likely going to turn into a buy trap. Buyers are going to get trapped by sellers, and we might start to see sellers become aggressive enough to start to push price back down into the base. Nonetheless, Fed's Goolsby's comments today, you can see it says, I'm not surprised by low claims data. The most important thing facing the Fed is that they need to get inflation back to 2%. He also said rate cuts can still go down a fair amount, but we still need firm evidence of an inflation retreat. Then he also said that he expects to see the Fed cut rates this year. So as I mentioned, rate cuts are still on the table, but we need to see data affirm that outlook. So as we continue to progress into next week, into the weekend, we still need to be mindful of these geopolitical escalations, the data front next week, and that'll all keep us in the loop with what's going to happen in regards to the total cryptocurrency market cap and whether we see this recovery sustain itself or whether we see a deep retracement back down into the low $3 trillion to high $2 trillion threshold from this consolidation that we broke out of most recently, right? So outside of that, just taking a look at the calendar real fast. Tomorrow, we don't really have anything except for a couple of scattered Fed speakers, which means the Fed commentary is going to be on our forefront for focus outside of any geopolitical tensions, tariff-related updates, and the possible market structure bill or any crypto regulation headlines that could come about. So tomorrow is going to be a very headline-focused day, especially heading into the weekend. Next week, let's just take a look at the calendar real fast. Next week, we have a bank holiday on Monday. I have no idea what that is. Hopefully, maybe you guys do. I'm personally not in the loop with any holidays. After that, though, Wednesday is going to be our most important day with ADP weekly employment change. We have President Trump speaking, and we also have pending home sales, constructions figures pending as well. Following that, the most important day next week is going to be Thursday with the final GDP figures and the core PCE price index. All right. So, of course, next week, ideally, we would like to see these figures showing signs of support for further rate cuts. Anything that pushes back on rate cuts, like stronger GDP figures or any higher inflation readings in the core PCE, or any supportive or stronger unemployment claims, that is going to continue to weigh further on the rate cut sentiment and could possibly continue to further weigh on crypto prices. Heading into Friday next week, we have some flash manufacturing PMI figures. We have the consumer sentiment and the inflation expectations, which will give us more insights into the state of the US economy. So we'll be mindful of those things as well. Outside of all that, of course, we'll still be tracking the geopolitical, tariff, and crypto regulation headlines. All right. Keep in mind that we're still in an environment where if we did see positive crypto regulation, maybe then we could start to see a decoupling of sentiment from traditional risk sentiment. And because crypto finally has clear regulations, maybe then it sparks some type of relief rally. But nonetheless, as I mentioned in previous Zoom calls, don't get too optimistic of this recovery that we've been in for the past couple of days. We need to see sustainable breaks and hold above these previous two resistance zones. And as of right now, we are not seeing that. So this would still be something of concern. Taking a look real fast at XRP's price action. As I mentioned in the last update, if we cannot see a sustainable move up into the $2.27 dark pool, we are likely to see a pullback continue down into the $2 threshold. It still looks like that is on the table as of time of recording. We are currently trading at $2.07. We have not seen buyers sustain a bullish move up into $2.27. Buyers likely just got trapped on the order flow at these highs comparative to where previous aggressive sellers most likely existed and are currently passively defending their prices. If $2 breaks, as I mentioned, the next order or area of interest where I will be looking to possibly accumulate some XRP and see buyers defend is $1.84. So let's see over the next 24 to 48 hours and heading into the weekend if buyers can defend at the $2 threshold. If they can, maybe then we start to see buyers accumulate, trap sellers, throw a passive defense, become aggressive, and push price back up to $2.27. But right now, the fundamental backdrop does not support that type of price action. We need to see some type of bullish headline, whether it's regulatory clarity, whether it's continued easing geopolitical tensions across the globe from multiple different jurisdictions, whether it's support for rate cuts, something that screams risk on. And right now we are not getting that, which is again why we're seeing continued blood shed in crypto. So with that in mind, what's most likely going to happen is a possible revisitation of $2 to $1.98. There at that level, we will see if buyers make an attempt to defend. If they cannot make an aggressive attempt to defend and push price back to the upside, we're likely to see $2 act as a resistance or consolidation for some period of time. If $2 breaks and starts to turn into a resistance, that is going to be the key identifier for us to possibly start to trail lower into $1.84. Anything below $1.84 opens the door for a revisitation of $1.69. And then next, after $1.69, if that does break, sellers become aggressive, pushing price below, trapping buyers that try to defend, and continuing with the overall momentum, that will open the door for $1.39. We are a far stretch away from that, and we definitely need to see a worsening sentiment environment from where we're currently trading at now, but just putting those levels on your radar just in case. To the upside, same thing. Levels have not changed. If we are to break above $2.27, next area of interest for intraday profit taking on my swing trading bags, I will be looking at still come in at $2.63 to $2.49. We'll most likely have an update before that comes into fruition, unless something over the weekend materializes and boosts sentiment significantly more than what it is today. Canton coin. Freaking it. Canton coin is holding Right now, relatively firm above this $12, excuse me, that would be insane. This 12-cent region, the institutional dark pool at the 12,257 cent range. Let's get rid of this stuff. In the previous update, I had mentioned that if we cannot break above the 15-cent threshold, we're likely going to see buyers trap sellers at highs, and we're most likely going to make our way back down into the daily candlestick low that existed right here on the daily. Last time we did the update, I had mentioned and drew this line on and said that this would be the next area of interest for sellers to push price back down into before we could start to see buyers defend. As of time of recording, that scenario has now materialized. We did not see buyers become aggressive above the institutional dark pool at the 15,898. Sellers have trapped the buyers right now at these highs, thrown up a passive wall defending their previous aggressive stance, and they were able to now push price back down into the dark pool or near it at the 12,257. So the question now is, do we see sellers engulf all of the buyers that existed in these two previous daily candlesticks? If they can, and we see sellers overpower buyers and push price below the 12,257, as always, we've been paying attention to the next institutional dark pool beneath that. We would need to see the 12,257 act as a resistance. If it does, that's going to open the door for a deeper correction down into the 0.9453, where I will personally be looking to accumulate some Canton coin. Anything beneath that, if sentiment worsens and we see sellers become aggressive below the 0.9453, that will open the door for a full-on retracement of the December rally that took place. We need to see that 0.9453 act as a resistance. If it does, the next area beneath that is likely going to be a full-on retracement down near the 0.5893 for possible reaccumulation. And yes, of course, I will be buying some more Canton at those levels as well. Always keeping them on our radar are the lower level dark pools at the 02602. I don't think a lot of people that have recently bought Canton, especially on Twitter, without these levels would be ready for that type of pullback if it were to unfold. In my personal opinion, I think it's going to happen. I think that it makes so much sense for these market makers to continue to add sell pressure or do whatever they're doing to manipulate the minds of the masses and thinking that altcoins are completely dead, dying, and going away before we see a sustainable recovery and rally heading into this new super cycle or mass crypto adoption that we're all planning to see. In my personal opinion, it just makes so much more sense for them to drop prices and continue to manipulate the masses into a state of fear, uncertainty, and doubt before we see any form of super recovery. So with that being said, I'm still keeping these lower levels on my radar, the 0.2602 cent psychological level, and underneath of that, the 0.001 cent level. We would probably see so much FUD surface around Canton if those levels came into fruition. I won't be on the side of that FUD. I will personally be positioning myself for the recovery that I believe will happen after those levels come into fruition. To the upside, if sentiment can improve, and if we can hold above at least this 50 EMA, which comes in the high 11-cent threshold, even if we were to dip slightly beneath the 12-cent range, clearing out some liquidity beneath these two lows, seeing buyers trap sellers and become aggressive enough to push price back to the upside. If at any point in time we break the 15-cent threshold, turn the 15,898 into support, that is going to open the door for 19 to 22 cents as our next possible profit taking areas for swing trading bags. Same thing. I feel like covering these two pairs, and with the lack of liquidity and price action in the crypto market, it's been pretty boring to do updates on these two trading pairs. Nonetheless, everything that we have touched on in previous videos has materialized and come into fruition. So hopefully you guys have enjoyed that. All right. That is it for the crypto update. In terms of the total cryptocurrency market cap, real fast, just taking a look right now, if we do give up the $3.2 trillion threshold, which ideally we would have liked to see turn into support, the next area of interest is last week's low, which comes in at $302 trillion. As long as we are trading above that, we are still operating in this recent bullish leg, and I remain optimistic of a continued rally. So even if we were to retrace all of this week's gains, find some support at last week's low, we could still form a higher low and continue with the momentum to the upside. If last week's low is broken, or the low that comes in at roughly around 3.02 trillion, then we are likely to start to see deeper retracements in the total cryptocurrency market cap and a full-blown correction of this previous bullish move from the bottom of this base. And we're likely to start to target the lows back at the bottom of this base, coming in at the high $2 trillion threshold. 2.8 to $2.9 trillion would be the first area of interest if we did see a deeper correction. If we give up $2.8 trillion, which right now is the bottom of this base, expect a deeper correction. Looking at the higher time frame and zooming out to the weekly and the monthly, we have constantly highlighted this area of interest as an area where market makers would most likely target if we were to see lower prices, as we can assume there is a bunch of over leveraged positions that exist underneath of this low. It would be ideal for these market makers if we did see a deeper correction and a risk off market sentiment continue to broaden for them to clear out the liquidity underneath of this level, which would put the total cryptocurrency market cap in an area of interest that I don't think many people are prepared for mentally, but that would put us down in the low $2 trillion range of anywhere between 2.4 to $2.3 trillion before we see buyers defend. Just be mindful of that as a possibility. Right now, it is just on the table as such. We have a long way to go before we get there. So I will continue to monitor sentiment for you guys over the next consecutive couple of days. Hopefully, you guys have been paying attention to the reports. Outside of that, you now know what to be mindful of next week. You guys know the current environment, which is still relatively uncertain, but remains optimistic if we can see developments unfold. But we need to see those things support a risk on environment, or else we're likely to start to give up some support and some gains that we've seen from the past consecutive couple of weeks. I'll take a break real fast. If you guys have any crypto related questions or TA related questions on the three pairs, total cryptocurrency market cap, Canton coin, or XRP that we trade, I'll let you guys ask those. If not, we'll roll over.